1,046 crores in 9 months of FY21. EBITDA was at 195.2 crores as compared to 244 crores in the corresponding 9 months of FY21. EBITDA margin was at 18.2% in the 9 months of FY22 as against 23.3% in 9 months of FY21. PAT stood at 157.2 crores, being almost flat on a year-on-year basis. EPS for the 9 months was almost constant at 3.83. From a geography perspective, US, North America was the highest contributor at 463.5 crores and witnessed 2.9% growth in the 9 months of FY22. EU and UK formulations market recorded 2.6% growth at 454.1 crores. Australia, New Zealand formulation market recorded 4.3% growth at 108.7 crores, whereas the rest of world recorded 5% decrease with sales of 46.5 crore in 9 months of FY22 on account of the geopolitical issues. Similar to the last quarter, we did see elevated input costs and increased freight and packaging material costs. Slightly redeeming factor is that these costs are now not increasing at the same pace as earlier. Hence, we should be able to see our margins stabilizing over the coming quarters as we pass on these elevated costs. However, our improved product mix, reduced financial costs, and lower tax outgo help us to neutralize the same, resulting in our bottom line being almost constant as stated earlier. We continue to invest in capacity expansion with our capex being at 32.8 crores for the first 9 months of this year. Our R&D spend was 21.7 crores, that is almost 2% of the sales for the period, enabling us to launch 4 new products as stated by Mr. Mark. We continue to remain debt-free. As on date, our cash and cash equivalents in the books was at 323 crores. In the light of the above stated uncertainties, we are unable to give any forecast. However, we are positive about the business prospects in the medium to long term. With that, I would like to open the floor to question and answer. Thank you.
Thank you very much, sir. Ladies and gentlemen, we will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handset while asking questions. Ladies and gentlemen, we will wait for a moment while the question queue assembles. To ask a question, please press star and 1. The first question is from the line of Shubhankar from SKSPL. Please go ahead.
Yeah, hi. Thanks for the opportunity. So, just wanted to get a sense on what all has hit the margin in quarter 3. If you can give some color to it.
Well, we had a substantial amount of increase in freight. We had packaging, raw materials, all these inputs which had gone up. Obviously, a lot of material coming in from China, which is again resulting in increase in cost. The freight from overseas, from China itself has gone up. So it's basically amounting to all components going into the product. In addition, the freight which has gone up by nearly 3/4.
And where are we in terms of those cost pressure in current quarter, in terms of freight and in terms of the other raw materials?
Well, in my previous quarter, I did mention it's going to take some time for it to come down or to even get better. I don't see the last quarter freight improving or raw material or packaging material cost improving. As Mr. Jitendra said, it has stabilized. It is not rising the way it did rise in the last 3 months. So you do see a bit of stability, and with that, we do expect from here it may start improving or tapering down. But I don't foresee this happening before March or April.
And thanks for this. And finally, so I mean, basically, we started the year. I mean, March 2021. We started with a very positive note. We were expecting a 15% kind of a revenue growth. Not so much on the margin because I can understand there are a lot of factors which is not in your control. But in terms of the revenue growth, it seems like we are going to end with a low single digit or kind of no growth year, FY22.
Yeah, I mean, because of the volatility in the market and the pricing that you can see, we have to take conscious calls at times where we have to ensure that we don't lose out on our profitability or the margins. So we took conscious calls. If we had to let go of certain contracts, we let go of certain contracts so that we don't bleed in terms of profitability. So we did give our priority to profit more than the top line, and that's why we could manage to sustain what numbers you see, or at least show a decent set of numbers out here.
All right. Thank you so much. Thank you.
Thank you. The next question is from the line of Viraj Mahadevia, an individual investor. Please go ahead.
Hi, Mark, Jitendra. I had a question related to passing on some of these cost increases. I mean, there's been enough of rhetoric in the wider media about cost escalations over the last 6 to 9 months. So my first question is, have we started passing these on? And when do you think most of that will start to reflect on the revenue side to compensate for these cost escalations? By Q4 or Q1 the next financial year?
We have started. We were able to do some cost increase, with respective clients. Some have started on the 1st of Jan. We have some cost increase which is going to come effective on 1st of April, and some which are going to happen in the 1st of June. It all depends on when we were awarded a contract. So
Understood.
Certain clients need 6 months, certain clients need 3 months.
Understood.
But we have basically pushed in for a cost increase. That said,
Understood.
Note of caution is we are all hopeful that this cost increase, which we are seeing in terms of freight, in terms of raw material, in terms of all the other dynamics, have stabilized and does
Right.
not go northwards from here on. Obviously, you see the geopolitical issues that are happening across the borders and what's going on with Russia, Ukraine, which are beyond our control, and any of this could escalate oil, escalate cost further. We all hope for the best, but I do believe there will be a stability in cost.
Understood. So, Mark, you're saying that of the existing cost escalations, obviously we can't predict what will come, what shocks will come down the line. Of the existing cost escalations, we've started to pass them on in a phased manner, and most of this will be done by sort of Q1 of the new financial year.
Yes, that's right.
Okay, and some of your input costs, if I look at players like Solara, etc., who are big players in ibuprofen, they've reported very disappointing results apart from other reasons. So it seems like the RM costs in some of these key products is also going down, which should favor you from a gross margin perspective going forward. Is that right?
We have not seen material costs go down.
Okay.
Actually, most of the material costs are more related to oil or petroleum products. And we have not actually witnessed that fall in raw material. If it has gone down, maybe ibuprofen to some extent.
Right.
You have the paracetamol or the acetaminophen, which has gone through the roof. You have metformin cost, which is going up. So
Right.
India is very dependent till today on intermediates and chemicals coming in from China.
Sure.
And China, for whatever reason, has basically increased their pricing or the benchmark of pricing, and at the same time has created this shortage, which is basically, which is again
Pushing prices up.
pushing prices up. So all these factors have led to even Indian manufacturers of raw materials to increase their prices. So I've yet to come across something which has not gone up.
Right.
Maybe one or two items here and there, maybe the odd ball out, but otherwise most of it has increased.
Okay. And lastly, Mark, any sense on the net cash balance? I've repeatedly asked this, as have other shareholders over the last year. Now our cash balance is 330 plus crores. We're in a very comfortable cash position. I know you've highlighted in the past several initiatives on the acquisition M&A front, maybe even multiple of them. But do you think now that our cash balances are where they are and hopefully we've hit sort of bottom cycle in terms of performance, you can allocate and return some of this cash back to shareholders, either through dividends or buybacks?
We have been discussing this at length, and we are open to whatever you mentioned, and it's on our.
I mean, we've done a primary issue to investors at 74 rupees a share. Your share price today is at 51. There is no mathematical reasoning or justification to not do a buyback at these prices with this kind of cash balance.
Absolutely, and we have allocated resources. What you see out there, we have allocated over 100 crores just on capex, and we have started the capex, part of it, expanding our capacities and infrastructure. We have allocated some more resources for M&As. And then we do take a point that there is a possibility of, free cash flows to be allocated into, buyback or something of that stuff. And we have discussed this, and we are exploring the possibility also. Great.
It'd be great if you can give it another look, given what's happening in the markets and where the share prices come to now. And also, you're obviously still generating free cash flow every quarter. So it's not like 330 is a static balance. So maybe if you can allocate 50 to 100 crores for a buyback, I think that would be a very shareholder positive, friendly move.
Okay. Noted.
Thank you. Thank you. All the best.
Thank you.
Next question is from Yogesh Vari from Arihant Capital. Please go ahead.
Thank you, sir, for taking my questions. I wanted to understand basically the revenue, the regional revenues. So to begin with, if I look at the US and North America revenue, and I do a backward calculation, it looks like that in Q3 versus Q2 of FY22, there has been a decline of about 9 to 10 crores. So about 157 crores in Q3 versus 168 crores in Q2 FY22. But what we understand is we launched 3 products in US. So if you can help me understand why there's a decline, what would be the factors behind the decline in the US revenues?
Hi, Yogesh. Jitendra here. So
yes.
As Mark mentioned earlier, basically because of the pricing dynamic, we have considered giving up on certain contracts because they were not profitable enough for us to continue. So on one side there was a degrowth coming on few products on those contracts, but then that was compensated by some new businesses, some new launches. So overall, we could sustain our numbers, and we have grown in the first 9 months. The new launches which took place during the quarter, again, they will take some time to pick up in terms of revenue, and we believe that these products have good potential. We will definitely penetrate into the market with reasonable market share of these products in coming quarters. So in coming quarters, definitely these new launches will pick up, and we will have incremental revenue coming from these products.
So can we expect the quarterly revenues to grow from here for US and in spite of the price erosion?
Yeah, we believe so, yeah.
And what would be the quantum of price erosion? It looks like the quarter-on-quarter degrowth in US revenues is about 5 to 7%. So we can take that to be the price erosion, 5 to 7%?
Yeah, it is single high digit number, yeah.
Pardon, sir?
Yeah, it's a single high digit number. Between say 7 to 8%, yes.
7 to 8%. Thank you, sir. And the next is on the Europe revenues. So what our calculation says is like there has been an increase of about 3 to 4 crores in Europe revenues on a quarter-on-quarter basis. So about 2 to 3%. So is this because of the new launch we had loperamide in UK? Is that the factor?
Basically, again, I think it has contributed to some extent, but again, not a very large number. So we have maintained the volumes of our UK business, So to some extent, we can say yes, it has contributed to the increase.
Okay, but this growth which we are seeing in Europe of 2 to 3%, that is like volume led. Is there any big factor behind that growth?
See, it's a flat number, so it's mainly we have maintained the volumes, but yeah, I think some incremental volume in new products definitely has a this number.
Sure, and sir, if you can just discuss or put some color on the industry with regards to these two product launch, these cetirizine hydrochloride tablet and the loperamide launch. If you can tell what would be the market size, what is the competition over there, and what is your targeted market share in these two products which you launched?
These products have a market size. See, the cetirizine we have launched in US. It has a market size of over $50 million, and I think in 2 quarters' time we will be able to achieve at least 10% of the market share. That's what we believe. And loperamide in US, I do not have the exact market size. It's relatively a smaller product, but we expect to achieve anything between 1 to 2 million pounds in this product.
Loperamide in UK.
In UK.
1 to 2 million pound in what timeline?
In UK, within next 1 year.
1 year. And in chloride will be like in 3 quarters, 10% market share.
Yes.
Okay, sure. And sir, one more thing, like regarding the gross margin. So on a quarter-on-quarter basis, there has been an improvement in gross margins from 51% to about 53%. So do you think we can maybe in the next 1 to 2 quarters we can reach the 55% gross margin?
We are definitely trying to pass it on to customers, and as we are doing that, it is helping us to improve our gross margins. So definitely, we are hopeful that it will improve in coming quarters.
Okay. And when I come to the other cost, in the other cost, we have in Q3 we had about 71 crores versus 60 crores last year, and you told that mostly the increase is because of the freight cost. So this 11 crores difference which we are having on a quarter-on-quarter basis, how much would be contributed by freight cost?
Substantially, I think over 90% will be from freight.
Okay, and as you told that you are seeing normalization in freight costs, so can we expect this 71 coming down to the 60 and those normalized levels in the next quarter, maybe coming quarter?
What market intelligence we have got is that it will remain a bit volatile for at least next 2 quarters. So we really don't expect it to come down at least for next 2 quarters.
Sure, sir. And regarding the effective tax rate, this quarter it was lower compared to last quarter. So what would be the reason for it? The effective tax rate, I think so it's about 21% something compared to last quarter, which is lower. So the factors driving it?
So see, our overall effective tax rate will be in the range of 22%. So we have operations in UK, US, Australia, and India. And UK, US basically are having 20% tax rate. Australia is having around 18%. UK is in fact 19%. And India is having a 25%. So on a blended basis, our effective tax rate is coming somewhere between 21 to 22%. And that is what we believe will remain.
Sure, sir. And one question on the raw material cost. So this quarter, the raw material cost was about 170 crores versus 113 crores last. This quarter it was 133 crores versus 170 crores last year. So basically, on a quarter-on-quarter basis, there has been decline of about 40 crores. So is it because of certain arrangements you have made with your suppliers, or it is because compared to Q2, there has been some decline in some raw material prices?
So basically, there is some improvement in the gross margin. So that definitely shows that the material costs have come down a bit as compared to last quarter.
Yeah, but do you see prices of like last time I think so you told that ibuprofen and paracetamol forms about 40% of your raw material cost. Right. So is it because of their prices coming down to the extent of 10-20%? Because the difference is about 40 crores on a quarter-on-quarter basis.
The paracetamol prices have not come down, but ibuprofen costs definitely have come down a bit. So ibuprofen costs have come down, say, around 5 to 8%. And paracetamol costs actually are high. Like last quarter, this quarter, we don't see any changes. So it is high.
Sure. And last quarter, actually, our gross margin was among the lowest, about 51%, which has improved to about 53, in the range of 53.5%. So you think that was the bottom, and we will at least sustain 53% in the next quarter and going forward?
Yes, we believe so. Yes.
And lastly, on the EBITDA margins, as Mark told that we will be looking at expanding the margins. And in the last con call, it's like we were targeting that in the long term that 22% margin, EBITDA margin. This quarter we had about 16%. So what would be like the view on margin? How do you see that coming up in the next 1-2 quarters?
I think the moment rate starts stabilizing, we expect at least 2 to 3% increase in the EBITDA margin just on account of rate itself. Then the raw material prices stabilization. Right now we are taking a gross margin hit of almost 400 to 500 basis points. So there also we see some improvement. So I think the moment market stabilizes a bit, we are very confident that we will increase our EBITDA margin will increase by at least 400 to 500 basis points.
Sure. And how many products? We launched 4 products during this quarter. So what is the expected launch in this Q4 and Q1 of next year? The new launches.
Yeah, this quarter we are expecting one launch. And for next quarter, it will be a bit early for me to comment right now. But this quarter, we are planning one product launch.
One launch in US?
Yes.
Yeah. And one question on your on the NZ, basically Australian NZ. So that region has done quite well in this quarter. It's like it has increased by about 7 crores from 32 to 39 crores. About 7%, 7-8%. So any particular driver, any success on any product over there?
I think we have taken some incremental market share, and in Australia, our Australia business is 100% into OTC, which has done relatively better in all our geographies.
And do we expect this momentum going forward?
Yes.
Okay. Thank you, sir. If there are any questions, I'll get back in queue. Thank you very much.
Thank you.
Thank you. The next question is from the line of Kamanjeet from who is an individual investor. Please go ahead.
Yes, thanks for taking my call. So my question is, what is the synergy going on OrbiMed regarding and how much fund has been used so far?
So we had issued them warrants wherein we have got 25% subscription money from them. So overall, we have received 90 odd crore rupees from them. and we haven't started utilizing those proceeds so far.
Okay. And
cash, yeah.
okay. And sir, your R&D expenditure right now for the including Q4, it is 2%, or it is till date it has been already 2%.
So our R&D cost, we have started spending a bit higher amount as compared to earlier years. Earlier years, those were in the range of 1.2 to 1.5%. So already this year in the first 9 months, we have crossed 2%, and I think by the end of March, it should be somewhere around 2.3 to 2.5%. Eventually by next year, we plan to spend somewhere around 3.5 to 4% of our revenue. So it is going to go up. We have definitely started, with aggressive R&D spends, and we intend to file more products in our regulated markets wherever we are present.
Okay. So because in financial year 17 it is 0.6% to the sales right now, in financial 21 it's 1.4. So can we expect in next 3 years the R&D expenditure will be more than 3%?
Definitely it will be more than 3%. In next 3 years, I think it should be around 5% of sales minimum.
Okay. 5. So in which area we are expanding in the existing domain, or we are doing some R&D in any other domain?
We are doing an existing domain. We are spending we are spreading, of course, into newer segments, newer delivery systems, liquid RX. We have a huge number of products in pipeline. Ointment is another segment where we are getting in. Soft gel, of course, we are spreading our basket of products. In terms of the therapeutical mix also, we are basically selecting products across the wider therapeutic segments.
Okay. Sir, our key material as used, how much it is in domestic percentage to our import one, in the sense of?
You mean to say import purchase?
Yeah. The raw material which we are procuring, how much it is from the domestic market and how much it will be from the import from the China or somewhere else?
Okay, I think we are importing around 40% of our total material requirements, and 60% comes from the domestic players.
So 40% is for our key material, that is paracetamol, PCM, and ibuprofen, or some including all?
Including all. 40% is including paracetamol, ibuprofen, and metformin. Okay.
And sir, it's still 8 months we have not used or we made amount, and when we can expect there will be any use, any news from the company side about we have done something, because since last 8 months nothing has been happened on those. It's okay, might be planning and strategies has been worked out, but it's just only 10 months left out to redeem all these warrants. So when we can expect some good news?
No, definitely, as Mr. Mark has said, that we have allocated funds towards the end utilization, and we are working on these areas. We expect the fund utilization to happen in next year.
Okay. Thanks, sir. Thank you.
Thank you. Thank you, sir.
Thank you very much. Before we take the next question, we would like to remind participants that you may press star and to ask a question. The next question is from Manoj Matthew Jacob, a retail investor. Please go ahead.
Hello, can you hear me?
Yes, we can hear you. Please go ahead.
Okay. Jitendra, your voice is very feeble.
Okay.
It's very feeble, but the questions to asked is clear. Okay, my question to you is simple. The diluted EPS, is it 1.2 or is it 1.11? Because on dilution you'll have 45 crore shares.
No, I couldn't get your question.
The EPS, the diluted EPS, it's 1.2. That's what you report. Okay,
right.
But on the net profit of this quarter, it should have been 1.11. Because when OBMET new issue comes and also Marks new capital comes, the share capital will go to 45 crores.
Yeah. So see, the OBMET right now they have subscribed to the warrants.
I know.
They have not been calculated here right now because we haven't received full money also here. We have 5% of it. So right now it is excluding the shares which to OBMET post conversion.
Okay. And the next question is: has the freight stabilized as the last quarter? Has it increased in February?
You are talking of
the freight cost.
Freight costs have been stabilized, but then again they keep coming up with GRI. The GRIs are general rate hike indications. So though there is no increase in last say 3 months, but you never know, so we hope that they will not go further and eventually they will start coming down. Definitely it will take some more time, but at least for the time being they are stable.
Okay. And the last question from my side is, with Brexit in view, okay, do you think our market in Europe will be affected because we only have a UK approval?
No, we were not having any impact of Brexit because as it is our UK centric, and in fact we have grown. I think there was no negative impact in our business due to Brexit.
No, my question is, we don't have for the factory in Goa a EU approval. We only have a Great Britain approval.
Yeah, but it is valid.
It is the UK approval is valid for EU.
Even in spite of Brexit.
Yes. Even after in spite of
all the common rules.
Okay. Thank you. That's all. Thank you.
Thank you. One. Next question is a follow-up from the line of Yogesh Tiwari from Arihant Capital. Please go ahead.
Thank you, sir, for taking my question again. There has been an increase in employee cost on a quarter-on-quarter as well as on a year-on-year basis. So any particular reason behind the increase in employee cost?
Our employee cost has risen by almost 2% in this year as compared to last year. And we have basically increased our overall headcount in India, even in US also. So that was the primary reason. We have started with an API division also in our company. So we have hired people for API, business and R&D as well. So yes, there's an increase in R&D cost. In employee cost also. Hello.
So it seems we lost the line for the current questioner. Participants, if you have a question, please press star and 1 at this time. Ladies and gentlemen, we would like to remind our participants that you may press star and 1 to ask a question. The next question is a follow-up from the line of Viraj Mahadevia, an individual investor. Please go ahead.
Hi, Mark. Sorry, just to stress, Mark Jitendra, you can see the slightly low participation on this call. And I think it goes back to investors' level of confidence in what they are seeing. So again, I urge you to use some of your cash balances to do a buyback. It's a financially attractive proposition if the future prospects of your business look good. There are doubts regarding authenticity of this cash and cash flow, and I think some of that will be put to rest when you use it physically for payouts for M&A and or buyback. Thank you.
Thank you, Viraj.
Thank you. Next question is from the line of Jaini, an individual investor. Please go ahead.
Hello.
Jaini, your line is unmuted. Please go ahead.
Okay. I want a view for growth perspective on a 3 to 5 year business.
Yeah. Hello?
Hello. Growth. I want to know about growth perspective with a viewpoint of 3 to 5 years.
Well, like I said in the beginning of the call or in the introduction, we are very confident on our trajectory of touching 2,000 crores within the next 2 to 3 years. I do believe we are progressing in that direction. I think that could be the first benchmark you can take from where we are today.
Okay. Thank you.
Thank you. Next question is a follow-up from Yogesh Tiwari from Arihant Capital. Please go ahead.
Thank you for taking my question. Sorry, sir. Actually, I was disconnected. I just wanted to know on the increase in the employee cost. If you can please repeat the increase in employee cost.
Yeah. So we have increased our headcount, a number of headcounts in India operations and in US operations as well. We also have started with an API division in our company. So we have employed more people there also. In R&D also we have increased the number of people. So this all has resulted in a 2% increase in our employee cost over last year.
And this API division is like a backward integration? You are focused on backward integration?
Yes.
Okay, so will this have an effect on expansion in EBITDA margin going forward?
It is work in progress, and it will definitely take a couple of quarters before we start using, having our own capital consumption. But once it happens, definitely it will improve our EBITDA margin.
Okay, so if I take a 1 year investment horizon, what would be the approximate impact on EBITDA margin because of the API division getting functional?
It will take anything between 1 to 2 years' time. It is difficult to basically start predicting a number here, but definitely it will give us incremental gross margins of 5% plus kind of number once we are fully integrated.
Yeah, so we can expect a 5% improvement in gross margins maybe 2 years down the line because of the API division coming in.
Yes, absolutely. Yes.
And sir, one thing on the other cost. So what I understand is like we would be passing on the freight cost to the clients, right? To the customer. We would not be taking it.
Right.
Yes. Yeah. And sir, can you give a hello?
Basically, the pricing, the cost will be passed on in terms of in entirety, including the material cost increase, the freight cost increase, everything put together. So when we pass it on, we consider all costs increase.
Sure. And lastly, can you give any outlook on what would be the approximate growth in the Europe and US markets going forward? If I take a 2 year view, what would be like the growth in these two markets?
We are targeting to grow 15% year on year, both in Europe and in US businesses.
Okay, sure. Thank you very much, sir. Thanks.
Thank you. Next question is a follow-up from Kamaljeet, an individual investor. Please go ahead.
Yeah. Sir, what is the plant utilization as of now?
Plant utilization in India as of now is around between 70 to 75%.
And whether it is an optimized one or it is just the standard one, like historically pre-COVID and post-COVID?
Can you repeat your question?
So it is 70 to 75 one, the ratio of plant fertilizer is the standard one as expected, or it is can be of up to 90% depending upon the raw material or as demand in the market.
No, it is standard. There is no impact of COVID on our plant utilization.
Okay, not from the raw material perspective as well.
No.
And so nowadays, like the inventory of the raw material, how much we are holding in the sense of period of earlier, some of the pharma companies increased the raw material for a duration of 6 months to 9 months. So what is our status, sir?
See, we have also increased our inventory levels. If you see our this September balance sheet numbers which we had published, the overall inventory we had was in the range of 3 to 4 months, and we still continue to hold that level of inventory.
And like, what will be the probable reason to hold 3 to 4 months, or it will be normalized as expected pre-COVID after some taking market conditions? What will be those reasons, sir?
See, right now the overall supply chain situation is pretty volatile, so we definitely intend to continue with this level of inventory for at least the whole 1 year.
So, like, as everyone is saying, supply chain disruptions and all, how much it can be a delay from a normal course? If you can let me know some ballpark figure, 5 days, 10 days, whatever it will be.
See, the normal shipment time from India to US earlier, it used to take around 30 to 35 days. Nowadays, it is taking more than 50 days. So that way, definitely the overall turnaround time have increased by 3 to 4 weeks.
Okay. Thank you, sir.
Thank you.
Thank you. Participants, if you wish to ask a question, please press star and 1. Next question is from the line of Aditi Kasbekar, an individual investor. Please go ahead.
Hello, can you hear me?
Yeah,
yes, we can. Please go ahead.
Thank you for the opportunity to speak. I just wanted to sort of reiterate an observation which has already been raised on the call, I think, by a couple of participants who've already talked about the use of cash on the book. So just wanted to reiterate, even in the past, we've seen a bunch of companies which, effectively then live with the stigma of not rewarding the shareholders for long enough and not putting the cash which has been raised to use on an appropriate basis within suitable kind of a time frame. So really urge you to sort of take a shareholder friendly move in terms of either announcing a dividend or, buyback would possibly be the best thing to do here. That's just a request. That's all I wanted to say. Thank you.
We appreciate it. Noted. Thank you.
Thank you. Next question is a follow-up from Yogesh Tiwari from Analysts Capital. Please go ahead.
Thank you, sir. One question on the depreciation. So there has been an increase in depreciation for this quarter. So is this related to the Goa facility, which you are ramping up?
Yeah, it's a normal depreciation increase on account of the capex which we are doing. So every year we are doing incremental capex, and that is resulting into higher depreciation. So it is coming from Goa. It is coming from our other 2 plants also in UK and in US.
Okay, so what would be the quarterly run rate for this depreciation? It would be in this 8 to 9 crores?
Yeah, it will be in the range of 8 to 9 crores, around 9 crores. Yeah.
Yeah, and one more thing. In your presentation, you have highlighted the long-term growth of the company, wherein you have put in 3-4 factors. One is through capacity expansion, inorganic growth, and other factors. So, can we quantify that? How much do you think? So it's like if you are looking for 100% growth in revenues, how much percentage will come from inorganic? How much from capacity expansion? How much from new product launches? If I can get that summary about these drivers, if I can we can quantify that.
See, we are projecting organic growth of 15%, which will come from our existing markets, existing products. Of course, new launches will help us to achieve those numbers. In terms of the incremental growth, definitely new launches will contribute significantly. At least 50% growth will come from the new launches as well. In terms of related growth, definitely it is difficult to comment right now.
Okay, so basically the target we have, the 15%, that will be driven by the organic growth.
Right.
And it will be like 50% would come from new launches, 50% from existing products, approximately.
Right.
And any other incremental will basically come from inorganic and acquisitions, about 15%.
Absolutely.
And sir, lastly, on if you can throw some color on the U.S. pricing erosion. So what are the inventory levels now with the distributors in U.S. and how it is affecting the price? Where do you see it bottoming going forward?
So the pricing pressure is on twofold. One is when you talk of RX, it is normally on the price itself. When you're talking of profitability, you have the cost increase also happening out there. So I do believe the pricing, as long as there is no uncertainty in the global market or there is stability in the global market, I don't see the pricing moving beyond what it has already moved today. That said and done, in the RX front in the US, it's a highly consolidated market. And hence, it just depends on demand and supply situation. When there's low demand and excess supply, then you do have volatility in pricing. But beyond that, I don't see price increases that will take place in terms of cost.
And in terms of inventory levels with the distributors in US, do you see a quarter-on-quarter decline in those inventory levels, which will support prices going forward?
Yeah.
Do you see those things in quarter-on-quarter level?
Yes, I do see that.
So the inventories for distributors has actually gone down?
Inventories are gone down. Obviously, again, it just depends on the wave of COVID. During the COVID time, distributors tend to basically fill up their inventory. And now that the wave is basically dying out, you would see them not buying for a certain amount of time and liquidating the excess inventory they kept during the COVID time. US hit nearly 1 million cases a day once upon a time. Now it's come below 300,000 cases a day. So obviously it is basically coming down.
Sure. And this 8% approximate price erosion which we had in Q3, what would be the corresponding approximate number in Q2, if I would like to compare it?
Probably the same.
Same. So do you think it's a bottoming, or it's like it will come down in the coming quarter, it has bottomed out, or it will persist for a few quarters around that point only, 8%?
It should remain. It should remain around there for at least a quarter, and then you may see a difference happening.
Okay. So once it stabilizes, it will most likely come down in 2-3 quarters.
Yes.
Okay. Sure. Thank you very much, sir. Thank you.
Thank you. Next question, follow-up from Kamaljeet, an individual investor. Please go ahead.
Sir, one question related to right now, employee cost has been increased. So it includes the employee salary hike for management as well, or it is just the new hires or something?
So we had normal increment also during the year for all employees, which we give every year to our people.
Okay. Sir, what will be the median salary of an employee to the management?
In terms of the increment you're asking?
Increment or in like in a ratio wise also?
It is between 5 to 10% on an average.
And the median in the sense of?
I don't have that number right now with me.
Okay. Sir, one point here in the sense of one side we are saying there are inventory with our distributor there. Another side we are saying that there is a shipping cost increase. So how it will be a margin effect if one side distributor have a lot of inventory and that is getting decreased, and one side we are saying that we have to send a lot of material and that is impacting our margin.
I could not get your question.
So, take an example of US in the sense of just my fellow colleague is asking the questions. So, take a container nowadays is 50 days and there is a freight rate high, but already distributor have some inventory of 3 to 4 months or 5 months. So, our margin should be segregated over a period of time only on the material which is we are passing through, rather than the material which is already there. Why we have to send that material there?
No, see, this is based on the forecast and the orders which distributors are placing with us. So once they place the order, we have to deliver it to them. So they cannot stop the shipment or the flow of business. So that will continue as it is, but definitely there will be some inventory adjustments which will keep happening based on the demand supply, based on the inventory levels. So that will always be there, and those moments will always be there at any given point of time. They will be making adjustments. If the inventory levels are high on their side, then definitely they will slow down placing new purchase orders.
Okay.
Once they place purchase orders, we will have to deliver them those materials.
Okay. Thank you, sir.
Thank you.
Thank you. As there are no further questions, I now hand the conference over to the management for closing comments. Over to you.
Thank you, everyone, for taking your time on a busy day. I'd like to wish you have a pleasant, great day and be safe. Thank you very much.
Thank you.
Thank you very much. Ladies and gentlemen, on behalf of DAM Capital Advisors Limited, that concludes today's conference. Thank you all for joining us, and you may now disconnect your lines.